These devices are later provided to the end users who are coming to any machine that they're going to find, whether at home, at internet cafe, whether it's a customer, subcontractor, whatsoever. They plug this USB device. Closer? Okay. So they plug this USB device into any Windows machine, plug it in, it runs the application without any installation on the PC, without any footprint on the PC, nothing to install, nothing to run, a complete workspace on a device ready to run anywhere. And as I said, the best for me is to do a demo, so I'm going to plug in the device. The other way around. So let's close the PowerPoint. The device is here. I'm just plugging it in. I'm going to start sudo. It will take a few seconds, and I will have my workspace running for me. So this is sudo right now loading. It's the virtual workspace. This machine has Office 2010, I think. So I created a workspace with Office 2003 here. It's running locally from the flash drives with all the application installed. I can open, for example, Excel, look at the speed very easily. Whatever files I'm going to have there were ready for me to run. Everything runs locally. No need to manage the Windows. No need to pay the license for Windows. I can open PowerPoint, for example. And if I'm going to go to my documents, I'm going to see actually the documents on my device. I can take a presentation and I can actually continue my presentation from here. So although it's a very nice things on the client, the goal for us is to provide a centralized management. We have a cloud offering where the devices are actually run locally but managed over the cloud with all what you expect in an enterprise environment, like user management, user groups, sending software updates. So I sold the device to my customers. I gave them a managed workspace inside an unmanaged machine, and I add the software, and can update the software, update the security policy, have reports, have usage for my users, can do whatever I want to do on my clients when they are working on the unmanaged PC. And the benefits for that are two ways. We are providing all the enterprises with what they call IT as a service. And this is the trend today that provide the desktop experience as a service at a very good cost environment. And eventually, we believe that all of you, or most of you, will come up and like you buy the application for your iPhone on an app store, you're going to consume the desktop as a service from service provider over the web, and we are going to be the platform for that. So with that, I would like to thank you very much, and just on time, she's smiling here. That's a good question. We are partnering with all the encrypted manufacturers like IronKey, MXI, SanDisk, Blossmacher, whatever you say. They are providing an encrypted USB device that if you lose it, nothing happens. Most of the drive that we see for our business is actually that's exactly data regulation for that. And I'll be happy to discuss outside all the non-cool stuff like virtualization, security risk.
We have time for one question. Who had a question? Okay, and say your name and their company.
Hello, I'm Alan Whiteman. Actually, we're like Macintosh for the Mac, and then a lot of companies don't allow dongle to be external devices to be put into computers because of security reasons for endpoint security. How do you get around? It's pretty amazing.
Yes. So for the first question, the answer is yes. We run on Mac, assuming you have parallels. So you have parallels. That's a joke. We are running on any Windows. Our unique is that we have just the application without the Windows, and you're actually using the endpoint that has a Windows, that the Windows is maintained and licensed, and you are providing that as a managed environment without paying the Windows. And this actually also answers your second questions, because these devices are used outside of the enterprise premises. It's a solution that gives a managed device at a very affordable and manageable environment to run on a machine outside of the enterprise. So it's like your work from home, you plug it in your home, you give it to your subcontractor, etc. It's not used internally inside the organization. Thank you again.
Sure, I want one of those.
Yeah.
That is hot. That means I don't have to carry everything with me. But, so, thank you very much. This is another example of the awesome technology coming out of Israel and going to be pervasively used throughout all of your business endeavors. So thank you very much. We love Cito, and please come and talk to Dror throughout the day. You can see him outside and stop off and ask him more questions and do some business with him. All right, thank you very much. So I want to mention that after our next panel, we're going to have a humongously fascinating knock your socks off speaker. And you're going to want to be here because it is someone that you'd have to go to Las Vegas in order to see him perform. And we have him as our pre-lunch mental expansion person. And so you're going to want to be here and listen to that and get all your friends to come in and be ready to tweet to friends what you're seeing here at the Israel conference. Before we do that, if anyone has lost anything, all of our folks that have a brown sash going across their jacket, that's part of our Shalom team. And can I get a hearty round of applause for our Shalom team? There are helpers that come and volunteer their time to assist with the Israel conference. You can, if you've lost anything, go to the registration desk, look for a Shalom team member, and ask them if you found anything. I think they have a pair of glasses out there that we're going to raffle off later on as well if they're not collected. Lunch will start after the amazing speaker, and we'll come back and we'll be giving out another opportunity for prizes at 1:55 in the afternoon. So mark your time because you can see people walking around with them and you'll want one too. Now you know Israel ranks just second in terms of the number of companies represented by a non-U.S. firm that are publicly traded in the United States. And we have as our next panel, as they come up to the panel chairs, it's called From Seeding Ideas to Selling Shares. And Israel is doing a fabulous job with companies that are going to the public markets and using the stock exchange as a way to finance their company and expand their company. Just recently, SodaStream, which is outside, just did a secondary offering for a mere $260 million, one of the largest secondary offerings ever, and certainly by an Israeli company. Now, today we're very fortunate to have the Toronto Stock Exchange, the president of the Toronto Stock Exchange, which proudly boasts the very first Israeli oil and gas company that went public on the Toronto Stock Exchange. So we're going to learn about a hot industry, and I'm sure you've been reading about what's going on in the gas world up off the shores of Haifa. You're going to learn a little bit about that today from our panelists from Adira Energy. You're going to learn a lot about incubators from our panelist from Trendlines, who has taken not one, but two of their companies public. You're going to learn a lot about making the right choices as a private investor when you seed a company and do it adroitly so that you are walking towards a fabulous exit. And all of that brought to you and helped to be financed by Silicon Valley Bank Capital. And you're going to see the different aspects of financing a company from an idea through a tremendous IPO or exit. And with that, I'd like to introduce Kevin Cowan, who will moderate our panel and introduce the rest of the panelists. Enjoy. Take notes.
Well, thanks very much, Sharon. It's a tremendous pleasure to be here. And guys, if we just heard, we're kind of the warm-up act for the amazing speaker. So we're going to pull together and do everything we can to get the stage set. But in the meantime, I would like to thank Sharon and the Israel Conference. Like I said, it's a great pleasure to be here. What we have planned for this panel is a bit of a whirlwind. As Sharon has said, it's from seeding ideas to public markets. And in the next 45 minutes or so, we're going to try and take you right from a seed idea through to utilizing public markets. Our agenda is, I will in a moment just introduce the panelists. We have an excellent panel here to cover all aspects of that spectrum today. We'll then have a quick overview by each of the panelists of where they focus, and then we'll launch into a discussion. So let me just kick it right off by introducing the panelists. We have Owen Zev, who is a non-institutional, venture capitalist focused on the internet and mobile internet spaces. Owen typically leads his deals and takes a very active role in the company he invests in. Owen currently serves on the boards of Chegg, Infolinks, Duda, House, and Wibia. Aaron Gershenberg, to Owen's left, is the managing partner of Silicon Valley Bank's Capital Funds Management Group. Silicon Valley Bank Financial Group provides diversified services to emerging, growth, and established technology companies, the life science, venture capital, and wait for it, the premium wine market. Todd Dahlinger, down the far left, is chairman and CEO of the Trendlines Group and chairman of Misgab Venture Accelerator. The Trendlines Group develops innovation-based businesses primarily in the life sciences and agrotech through Misgab Venture Accelerator. Todd serves as the chairman of two companies traded on the Tel Aviv Stock Exchange, ETView and FlowSense. And then last but certainly not least, to Todd's right is Alan Friedman, who is the co-founder, director, and executive vice president of Adira Energy. As Sharona just mentioned, it's the first Israeli listing in the Toronto Stock Exchange group of exchanges. It's an oil and gas exploration stage company with operations in the state of Israel, listed venture, developing exploration petroleum licenses exclusively in Israel and offshore Israel, and as I mentioned, the first one to go public in Canada. So we're each going to do a brief overview. I'm going to kick that off, and then we'll kick it over to the other panelists. I think I did have some slides, and I'll just figure out how to advance that. So I'm going to be fast, but the first thing is, many may be wondering, what is our connection, and you know, why on earth are we here from the Toronto Stock Exchange Group? And I guess I'll quickly say we've spent a tremendous amount of effort over the last 5 or 6 years expanding our international business. It is going like gangbusters in both our listings and our trading area. We have blown through 300 international listings of companies from around the world that are coming to seek capital on our rather unique market structure. The U.S. is our number one. It's the number one destination both for us and for U.S. companies going outside of the United States, about 150 U.S. listings. We've gone from 0 to 50 in China in very short order to 35 in Australia and 20 in South America as more and more people continue to access capital. We have seen an opportunity in Israel, and hence the dual connection with both the U.S. and Israel. And for those of you who may be wondering if you've heard about us at all, you may have heard about us in the resources context. What on earth is our value proposition to either Israel or the United States? But I think fundamentally it's two things. First, we are the premier exchange group in the world for resources, and I'll talk about that in just a minute. But the thing we're a little bit lesser known for, but is very quickly accelerating in our business, is just small and medium enterprise generally. We do run what Bob Greifeld, CEO of NASDAQ, has called the world's best venture market, and I think we do run the world's best two-tier market for growing those companies. We are a multi-asset class exchange group. We own 5 exchanges, including Toronto Stock Exchange and TSX Venture. You may have read we are currently in a merger proposal with the London Stock Exchange, which gets voted on June 30. And just in the last 2 weeks, the Canadian banks and pension funds have come in with a hostile bid for us. So we have a very, very exciting month ahead of us. Let me just do a little bit of quick myth busting about Canada. We don't all wear red tunics. We don't all snowshoe to work. I want you to know that today in Toronto, it's hotter than it is here in Los Angeles. Canada, very strong fundamentals in the financial sector. Our financial system is pointed to as one of the ones that came through most unscathed. In the recent financial crisis, we have the lowest debt to GDP among the G7. We've been called an economic star by Economist magazine, and for those of you who may have occasion to travel cross-border, our currency is doing extremely well. We are one of the top 10 exchange groups in the world. You may or may not know that. You probably don't by any measure of listings, market capitalization, or equity, and are continuing to grow at a tremendous rate. Now, being in Los Angeles, I'm going to try and do something a little atypical for a Canadian. We're often thought of as being too modest. We're told we don't promote ourselves very well. So being here in the United States, I'm going to try and be a little more American just for a second. We are 7th in the world in market capitalization, 8th in the most important area, which is equity financing, over $50 billion raised by our listed companies last year, over $60 billion the year before that. We have 60% of the world's public mining companies trading on our exchange. We have 35% of the world's public energy companies trading on our exchange. We are 2nd in the world in terms of total number of listings. Some of that you may know, most of it you probably don't, but here's what I'll bet you don't know for sure. We are 2nd in the world in technology listings after only NASDAQ. We are 1st in the world in clean technology listings. Again, you know, things that maybe as quote-unquote modest Canadians we don't do a very good job talking about, but some areas of strength there that, as I mentioned, you may not know. I'm going to, I think it looks like I've lost my... I wonder if I'm not pointing this in the right direction. Could I have the next slide, please? Maybe I'll just ask for it. Okay, so I'm just going to quickly wrap up here, but the thing that we do that is different is we cover companies from the smallest nano cap, pre-revenue, to the largest blue chip. And we do it through running a 2-tier exchange system with our TSX Venture Exchange, which is just over 10 years old and provides a place for early stage companies, and then our senior Toronto Stock Exchange. In the 10 years of existence of the venture, we have had 600 companies move from our junior exchange, the TSX Venture, to the Toronto Stock Exchange, and that is a record that I think you'll find unrivaled with any other exchanges in the world. And I think part of the reason we've been able to do that is because we offer a multitude of products for going public. The traditional IPO, of course, we encourage reverse mergers, and we've actually dedicated a portion of our stock list to merger opportunities. We have a proprietary product called the Capital Pool Company, which is essentially shell companies that are listed on the exchange and seek out acquisition opportunities. It's been wildly successful, and when I say that, if you're thinking 10, 20, 100, we've actually had 2,000 Capital Pool companies list and go out and then facilitate the going public process with other active businesses. And then finally, the world is trading Canada increasingly. Every single day, 40% of our trading comes from outside of Canada, from international, as Canada becomes more and more of a trading destination. And the point there is really just that when you list in Toronto, you're accessing international capital, not just Canadian capital. So with that, I'm going to wrap up my pitch, and I'm starting to go down the line here, and we'll start with Owen, and each of us will spend a couple of minutes, again, talking about what we do.
Thank you. First, the next speaker is really good. So if you need a bio break or something like that, this panel would be a good time to do it. You don't want to miss the next one. My name is Owen Zev. I'm an investor. I invest in internet companies. And I am technically, I guess, an angel investor because I don't manage other people's money, I invest my own. But unlike most angels, or at least the one that get more often written about, who put very little money in many companies, also known as spray and pray, I have the opposite approach. I put much more money, but in a much smaller number of companies. And I'm very actively involved in those companies. And right now, I have 5 that I'm very intimately involved with. And with that, I'll just pass to...
Thank you. Thank you, Aaron Gerstenberg. I sent some slides up. Here we go. And basically, Silicon Valley Bank is one of the few banks in the world, just a handful, that is almost solely focused on banking innovation innovation companies, technology companies. Not many people know that we're global. Let's go to the next slide here. We started back in 1983. We started because banks like Wells Fargo Bank and Bank of America and others really weren't paying attention to startup companies. They wanted companies that had been profitable, had been around for three or more years. And our business model is to start working with companies from the time they become incorporated, even before they raise any money from Oren or from other venture capital firms. Our market share among venture-backed companies is north of 50%, and we're in 27 offices around the U.S., offices in London, Israel, India, and China. Once companies begin to become really profitable, over $100 million in sales, our market share drops significantly, but that's an area of growth and expansion for us. We have typically not been cash flow lenders, but that's something we're doing more of. Our model has been to lend to companies as they raise future rounds of financing, in a way helping them get a lower cost of capital, less dilution, but our belief that once a company raises an initial round, a Series A round, there's a high probability that they'll be able to raise a Series B and a C. And should they not be successful, there's enough intellectual property created there that we'll be able to get our loans repaid. Next slide. It's a very differentiated business model. As I mentioned, we're focused on innovation around intellectual property, although we have been doing much more in the consumer internet space, and we've seen some very good results there. We have more than 550 venture capital firms as clients of ours. We bank many in the U.S. as well as over in China, India, Europe, and Israel as well. I mentioned already that we were started in 1983, and very few people know just how big we are. When you look at our total assets under management, $32 billion, $18 billion on our balance sheet, and about $5 billion in loans. Next slide. Really, the big focus of the institution right now is in the UK and in China. In China, the previous CEO for the past 10 years, Ken Wilcox, is moving over there. He'll be chairman of Silicon Valley Bank and focused on working with the Shanghai Pudong Bank on a joint venture. We just announced Daniel Cohen, who was at Gemini, is the new head of the office in Israel, and we've been very active there for the past 10 years as well. And in India, we're waiting for a banking license. That could be a long wait. They're very protective of their domestic markets with their own banks, so there's been no banking licenses issued in quite a long time. Next slide. I just wanted to show this because not many people know just how diversified our loan portfolio is between software and hardware, life sciences, banking of the venture capital firms. There is about 10% of the bank is in ultra-premium wineries. We followed some very successful entrepreneurs to Napa and learned how to focus on those wines that are really exclusive, waiting list only type wines, and that's been a very nice synergy with our business, so that when we're trying to win business, showing up with a nice bottle of wine often helps. I also wanted to show the results because banks have had a pretty bad name over the last couple of years, but our bank is expanding its loans and tremendously profitable, very well capitalized, and so something certainly if you're a public investor, something to know. Silicon Valley Bank if you're looking for exposure to technology. Next. What I do is I raise money from mostly pension funds these days. The first fund I raised was back in 2000, the first fund for Silicon Valley Bank with outside limited partner money. That was a great time to raise money right before the bubble burst. Just from a fundraising perspective, it was a lot of friends and family, CEOs, CFOs who'd been successful in the Valley and elsewhere. Also some money out of Japan, Azor Bank, EOB out of Singapore, some money out of Switzerland, a big hedge fund that led to a relationship with a large insurance company there. But over time, almost all the limited partners that were our original LPs have had challenges, and so we've migrated much more to public and private pension funds right now. And we build a diversified portfolio, providing our investors exposure to clean tech, life sciences, information technology, and then concentrated in about 10 names, the most well-known names in the venture industry. and then some specialist smaller funds as well. We do some secondaries. A majority of our investing is in the U.S., although we have exposure in India and China, Europe, Israel. Then lastly, I just wanted you to know that the exit market is very good. We're seeing great write-ups in the portfolio and nice liquidity. And this is nice to see that the actual money coming back is greater than the dollars that are being invested, although there is a lot of discussion about the current bubble environment. That's something we can talk about if people are interested in that.
Great, thanks, Aaron. So Alan, we'll go over to you, I guess.
Thanks, Kevin. My name is Alan Friedman, a founder of a company called Adira Energy, and a little bit different, I suppose, to a lot of the speakers here in that we just the old-fashioned business of digging and drilling and looking for resources under the ocean or under the ground. As Kevin mentioned, the Toronto Stock Exchange group of companies is probably the biggest host of capital for investment into early-stage mining and oil and gas exploration opportunities. Adira Energy was the first Israeli company. We call ourselves an Israeli business, even though the holding company is in Canada. We listed in December of 2010, 2 weeks after the biggest discovery in the last 10 years in oil and gas was made, and that was offshore Israel, 135 kilometers west offshore Israel, in a project called the Leviathan, which is controlled by Noble Energy and Delek, who most people here have probably heard of, Yitzhak Shiva, who's a household name in Israel. You can change the slide. So that's a map that was published about 1.5 years ago by USGS, that's the United States Geological Survey. And in that sort of triangle, which is just off the coast of Israel, there is expected 122 TCF of gas. So the story about Moses wandering around the desert for 40 years and finding the only country in the Middle East that does not hold oil and gas is false, and it's just been proved so. The two discoveries I mentioned earlier, the one was the biggest of 2009, that's Tamar. If you click over to the next slide, the Tamar is the yellow license right next to the big triangle. There is over 8 TCF of gas. That license itself will take care of 40 years of Israel's gas requirement for electricity, commencing 2013 when that's in production. The big triangle you see to the left of that, that's the big discovery, really significant in world standards, and at this point in time, it looks like most of that gas will be exported. So who would have thought that Israel would in fact become a net exporter of gas into Europe? It's causing a lot of anxiety with some of the countries in Europe, and in fact, Russia, who's controlled the European gas route, is now concerned that they've got a competitor, and in fact are looking to invest in Israel as well in some of the license blocks. Adira Energy's licenses are the white licenses, 10 kilometers west of Tel Aviv. So if you in the hotel at the Intercontinental David or the Hilton, you look out your window and you'll be able to see our license blocks, which is very close to shore. Our license blocks, in fact, two of them, the two northern licenses, Gabriela and Yitzhak, are actually targets for oil. We are earlier stage in the exploration process. We've shot 3D seismic, which is a technology, a geophysical technology, which some of the technologists here would understand. It's sound waves that are shot to the bottom of the ocean. The water depth is 200 meters, but it penetrates the basin, and in fact, 5,000 meter depth, there is indications of oil on those blocks. Change the slide, please. So in Israel at the moment, there is, of course, a lot of anxiety about the supply of energy. A lot of people don't know that 20% of the electricity requirements for Israel is imported from Egypt. And as soon as they had the turnover of government in Egypt, there was some sabotage of the pipeline, and 20% of the gas was cut off to Israel. And in fact, Israel had to rely on its only gas, the gas field that it has, which is called the Mari B field, which has been stretched almost to capacity. There's about 2 years left of supply out of that field. So it's really important that Israel has made these discoveries, and it's really in the nick of time. The major supply of energy to Israel will be natural gas, moving away from coal and oil over the next 10, 15 years. That's just a graph. I'm not going to get too technically into this, but the thick green line that goes through the middle is the demand for oil, for gas to supply energy. The bottom left-hand corner is the existing field in Israel, which is in depletion right now. The big gray one is the Leviathan field, and as you can see that all of Israel's gas requirements for energy have been taken care of as soon as that comes on stream, which is in the next few years. The window for Adira Energy is you can see the discrepancy between the demand and supply. Our licenses are very close to shore. In the event we're successful, we'll be able to bring gas and oil onto shore pretty quick. Next slide. So Adira Energy, a little bit about the company itself. We have, for a small company, a very significant license portfolio, earlier stage exploration. We have differentiated ourselves from some other companies operating in Israel who are more financial investors into the space. We have a very strong technical team. In fact, we made a public announcement today on the TSX. We've just hired a CEO, Machezi Kugler, who is the ex-Director General of the Ministry of National Infrastructure, a very significant management team based in Tel Aviv. We also have an office in Toronto, which I run, which basically deals with dealing with investors, institutional and retail investors, and anything related to the stock exchange. This is a famous quote that Warren Buffett mentioned in a CNBC interview just after he bought Word Times Istar. And he says, you go to the Middle East looking for oil, you don't have to stop in Israel. But if you go looking for brains, for energy, for integrity, it's the only stop you need. Well, who would have thought they could have proved Warren Buffett wrong? It wasn't me, it was Noble, but I hope to complement that, and hopefully we'll be the next successful company operating in Israel and contribute to the energy issues that Israel have. Thank you.
Great, thanks, Alan, and over to you, Todd.
Hi, I'm Todd Dahlinger. Will you be my friend? It's just great to be sitting with rich people, successful people, and Sharona, among the successful people here today. I just want to say thank you. I am looking forward to the next speaker very much. Although I thought you did a very nice job, Kevin. But with that, let me tell you just a touch about my business. Our business is investment in Israel and investment in very early stage. We actually create companies. But let me give you a bit of a vocabulary lesson here, if I may, because we talk about business incubation, we talk about technology incubators in Israel, and you must know how it's different from the US. When we think about business incubation in the US, sometimes it's referred to a bit derisively, perhaps, but referred to as a real estate play. In Israel, if you're in a government-licensed incubator, it means that that incubator invested in your company. We are investors. We are very efficient in our use of capital. That's a euphemism. It means we don't invest a lot of money. But we take it for a great run. We began our business in 1993 as a business development organization working with young companies and being in Israel at really a time of phenomenal growth. And we built a rather nice business development practice that morphed over the years into an investment company. Today, the Trendlines Group is our principal investment vehicle, although we also have 2 venture funds, one of which is fully invested and one of which is brand new and just did its first close. The Trendlines Group owns 2 business incubators that are licensed by the Israeli government. Operating in the north is our Mizgav incubator, which is focused on the life sciences, principally medtech, medical device. And in the south, our Mofet incubator is focused on green tech. And that's to say principally agricultural opportunities, but also in general in the clean tech field. The next slide. We try to bring together these 3 elements. We are business development people. While our business is indeed investment, we perceive ourselves and we look for skills in our staff that focus on business development. As seed stage investors, we're dealing often with engineers, with scientists, with medical doctors, and our mission is to support these entrepreneurs. And we do this by seeking to identify both their strengths and weaknesses and supporting them on each of those issues. And typically it means that they're going to be weak on the business development side because they will be most often first-time CEOs. So it's business incubation matched with seed stage investment, and our critical difference is owning a business development company. This differentiates us in the Israeli market. We're actually not familiar with anyone around the world who runs quite with our business model, but it's allowed us to grow through the years such that we have investments in some 60 companies today, and of those 60 companies, more than half we have very substantial stakes in. Next. We focus on the entrepreneurs, we focus on the opportunities. We drive scientists crazy by talking about markets, market opportunities, and where the exit's going to be before we ever seriously engage in discussions about what the science is all about. We support our companies in every way. They're located in our facilities in the north or the south of Israel. We provide bookkeeping, accounting, legal services. We want our entrepreneurs to focus on learning about the business, and they do that in part by our assigning business development staff to them, and of course developing their product, developing their technology. We focus on these guys, and it is indeed mostly guys today, and we try to build businesses with them. We've, as was mentioned earlier, we've taken 2 companies public on the Tel Aviv Stock Exchange last year. We are in the process of taking a company public in the US at this time. And as we've discussed, in 2008, we were on the verge of taking a company public through a CPC on the TSX. And unfortunately, September 2008 happened and put an end to that. But certainly a market we want to go back and look at. We view our investments in the public markets, our taking our companies public at this time, not so much as exit opportunities, but really as access to capital, public venture capital. Everyone here knows that Israel's a fascinating place, and we have tremendous deal flow in our operations. We look at more than 400 investment opportunities every year, and yet we are actually agnostic as to the origins of the technology and where the inventor comes from. In the last year, we've licensed technologies both from Columbia University and now from Johns Hopkins in Baltimore. Next. We look to find how we can best match with partners. Although we have a staff of 30, which makes us a little different in what we do not succeed without great entrepreneurs, without strategic partner relationships that we've entered into around the world, and very importantly, with investors. 75% of the capital at Trendlines and in our portfolio companies comes from the US, and the balance comes from Israel. And we'd very much like to talk to anyone who's interested in joining this sort of adventure with us.
Great, thanks very much, Todd. So what we're going to do, I think, in the next few minutes is try and take a discussion from ideas through to incubation and then to talk about the public market. So we're going to start first with Oren and Aaron, talk about some ideas. We're going to go down to the far end to Todd, talk a bit about incubation, getting into the public markets, and then with Alan on the public markets. So Oren and Aaron, how do ideas get funded, and what does it take to interest an investor at the idea stage?
I can speak about what it takes to interest me, because I don't want to speak for others. First and foremost, I look for a strong value proposition. So many companies, it's not really clear the value proposition to the customers. So I'm typically looking for something that I could explain to my grandmother if she were alive in one sentence. So it has to be very, very simple. And other than that, you want people that, I want to see people that I feel that have a chance to go the distance, that I feel are backable. It doesn't mean that they have to be proven. It doesn't mean that they have to be second-timers. But I don't want to invest based on the premise that I'm going to bring a CEO later, because I want to be very loyal and supportive to my CEOs. And beyond that, the usual stuff, big markets. And typically, if it's a totally new idea, probably I'm not the right investor, unless it's someone I know and trust. But typically, I also want to see some traction. So I think especially in the space of the space that I'm focused on, the internet space, there's so much you can do today with fairly little money. And I see people who have done amazing, amazing, amazing stuff prior to raising any money. And these are the ones that I love best, because I just do a very simple math. If they've achieved so much with so little, what if they had a little bit more that they could leverage? And that's been a strategy that's been working very, very well for me. So that's just me.
Oren, how much is the idea and how much is the people?
I think the idea is a lot. I think that it's very, I hear all the time people say it's not, it's all about management. Every time we succeeded, it was because we had a great management team. And there's some truth to that, but I think that there's also flaw in the logic, because I think that we think about the people differently because they succeeded. So if I have a successful investment, I think about the management, that they were great. And the exact same people could have not made it because there's a lot of luck. The idea is important. So I actually don't subscribe to the school of thought that says, oh, it's all about the people. I think that the idea is important. The space is more important than the idea, and the general direction is important, because the idea is going to change and it's going to be fine-tuned, etc. But it's good to start in the general general direction, and if you change a little bit here and there, that's fine. And again, both are very important. In other words, I wouldn't dismiss one over the other.
Okay. Aaron, your thoughts?
Well, I guess my first thought is that if there's anyone in the audience thinking about starting a company, please do. It's something that's so critical to our country, to Israel, to the entire world, that creating those really valuable jobs, increasing competitiveness, future expansion, it's absolutely critical. And now is a good time to start companies and to seek funding. I think one of the challenges that many entrepreneurs have is knowing how to go about that. And there's a lot of resources out there. Certainly Silicon Valley Bank is one of those resources. But figuring out how big your idea is, what's really sizing the market, and being very disciplined and having a lot of support for the market you're going after, how much money you're going to need, and what time frame you're going to be able to do that, and really understanding what's defensible and proprietary about your approach are absolutely critical. Whether you're starting with friends and family, your own bank account, whether you're bootstrapping it, whether you're going after strategic investors, small niche venture firms, or more established institutional venture firms, and again, getting back to how much money you're going to need and how you stage those dollars. One of the challenges we see are companies that raise too much money too quickly, spend that money too fast, they haven't hit enough milestones, and then they really have trouble getting follow-on financing. But I'll leave it at that.
And your thought on the importance of the people versus the idea?
I think the importance of the idea is absolutely paramount for me in the size of the market, but then you have to have the passion of the people. And clearly there's a lot of companies that get destroyed by founder issues, by just not executing well, and that so that's an absolutely critical importance.
And do you guys get involved? I mean, if you have the good idea, do you help facilitate change in management?
We're not active investors on the board. Where we play a role is working with companies to make introductions when they're seeking funding. We get involved lending early on. My investing model is following people like Oren or Mike Moritz. Oren and I were talking about Mike Moritz versus Mark Andreessen and others in the Valley. It's very much a what we call a co-investment model. We'll sometimes lead around where the insiders want to increase their ownership, but we're a pretty unique position given our market share and information to evaluate a company and then determine where it is on a risk-return basis and determine whether it's something that's a real fit for the funds that we have for investing directly.
Great, thanks, Aaron. Todd, so we're hearing a lot about incubation programs, and how are those working? How do they work in Israel? What's different about them? And how do investors in both Israel and North America receive those?
The largest single difference that I know of is that we've got in Israel something in the range of 25 incubators. In the States, I believe the number is about 3,500. Now, interestingly, in spite of that, there are more incubators in Israel that invest in companies than there are in the U.S. that actually invest in companies rather than simply providing housing and some support services. It's a critical difference. It's something that has a historic reason dating to the Russian Aliyah at the beginning of the 90s. I moved to Israel in 1990. It was my family from Kansas and billions of Russians all at the same time. That's what it seemed like to us then. A critical difference as well within Israeli incubation is the extremely high level of involvement. We actually typically take a substantial equity position. Our average initial investment in a company, we take a 50% stake in the company. We are obviously the largest investor, and we remain extremely active in the company for years. We think that's necessary. Just a quick comment, I'm sorry, off the incubation, but to invest in management as versus technology. Well, of course, I think that there are certain conditions that are necessary. We, of course, have to believe that there is a good market opportunity and a technology to match that opportunity. But it's not sufficient. I hate the fact it sounds so much like a cliche, yet we see again and again that having the right people running companies is the #1 issue. We know that every single company, at least in our experience, perhaps we're not good investors, every single one of our companies is going to run into major problems along the way. And if we don't have good management in place, it means we're either going to replace them, or it means that we've chosen in a clever way and have the right guys, the passionate guys, to make it work.
When you talked about the number of incubators in Israel versus North America, I was trying to do some quick mental math. In Canada, we have what we call the 10-to-1 rule. So the United States has 10 times the population of Canada, and any economic statistic, you can typically do the 10-to-1. You can be pretty close, at least close enough to pass your exam. Do you have anything like that in Israel? 7 million versus 330, 340 million?
I haven't the foggiest idea.
Okay. Now, just one more quick question for you, Todd, before we move over to Alan. My sense is, from what you're saying, that you may consider public alternatives at an earlier stage than we typically might think about in the United States. Certainly, that's what differentiates Canada. We use public markets at a much earlier stage than you typically find in the United States. Could you comment on that?
Yeah, the Tel Aviv Stock Exchange is actually relatively friendly to taking companies out very early. There's a very specific status for R&D companies where a minimum raise of, I believe the number now is 16 million shekels for a company that qualifies as an R&D company. That would be, what, $4.5 million or so. And as well, there's a very active reverse merger process in Israel. And it's all fairly neat as these things can seem to be, where Israeli companies proceeding into reverse, most typically the shell is taken through a bankruptcy type proceeding, and so there's a very high degree of confidence in the cleanliness of the shell. The two transactions we did last year were both reverse mergers, and the transaction that we're doing now in the U.S. is a reverse as well.
Mm-hmm. Great. Thanks, Alan. Let's go over to you, and you're kind of the interesting guy here talking about oil and gas and more of a technology dominated area. But what has been the reception in North America among investors?
Well, first I'd like to say that particularly in the Canadian sort of going public model, we find that the companies that go public, it's really an entrance, not an exit, wherein the companies are relatively new. In order to attract capital from the right institutions and investors, they do expect the company to be public. So having said that, we realized the great difference from being public elsewhere and then coming onto the Toronto Stock Exchange. All of a sudden, we had a